So you need to be absolutely prepared for today because the Fed are holding a loaded gun directly at the markets. And the question is, will they pull the trigger or not? So they are definitely, or the market is at least at the mercy of the Fed. And it's all going to come down to that today. You can see already the market is kind of selling off slightly in the early hours of the morning. Obviously in anticipation of the event where the people are fearful and trying to get out because they anticipate a bad print, or if it's just because they're de-risking. Either way, the market is going down, and we do have a lot to cover today, such as, for example, what someone just said, that the DXY, we're going to have a look at the 10-year yield. There's a whole lot of different things that we need to be focused on. Pulling up the economic calendar, you can see that's going to be 2 p.m. my time, which should be, if you are in Europe, it's probably very similar to my time over here. And if you're in the US, it should be in the region of, I believe, about 7 or 8 a.m. your time is when the economic FOMC meeting is going to take place. And that is definitely going to move markets. So you need to be positioned well and prepared. I recommend for most of you out there who are looking for short-term trades, don't even think about it. It's probably better to just sit on the sidelines and wait for confirmation of which way this market is going. But for the DJs out there, I will still give you trade ideas if you stay until the end. So let's quickly move on over here. I wanted to touch base on what Gareth Soloway has to say. He says things to look for in the Fed Reserve statement. Number one, interest rate hike, 75 basis point is expected. Two, look at the commentary about pivoting, so future hike guidance. That's very, very important. Number three, the press conference questions on what the Fed does and if the economy spirals into a deep depression. That's where you're going to gauge what Fed Jerome Powell's tonality is like in the answering of those questions. I anticipate he's probably going to say something along the lines of, we have to get inflation under control. That is our primary goal, and we'll do anything that it takes. And you need to listen how his tonality is within that. And then it's number four, how many dissent within the Fed? So in other words, what are the differing opinions that the Fed may have, or at least those who form part of the Fed? Looking at this tweet over here, you see all the countries that have done 100 basis points or larger hikes so far this year. And then he says, will USA be added to the list tomorrow? And you can see there is many countries. It looks like when you're just looking at this as a map that's been highlighted, it's about 1/3 to almost half of the entire world that has already done a 100 basis point hike. So it's going to be an important day, and I think that you should prepare for anything, prepare for the worst as well as for the best. So moving on over here, there is things that are heating up within Russia, and it's interesting because Russian media sources are reporting that Putin's speech has now been rescheduled for tomorrow. In other words, that's for today. You really are in a pressure pot over here with regards to the markets. As TED Talk says here, he says tomorrow now we have Putin speaking and the FOMC meeting both on the same day. This is quite funny underneath over here. It's like a sacrifice or something. So it's going to be a big day. Today is an enormous day, and I don't want to make too many calls on which way I think things are going to go, because the truth of the matter is you really don't know. Nobody knows what exactly is going to happen. All that we can do as traders and analysts is we can look at the overall trend of the market on the weekly, the daily, and the 4-hour trend and ask ourselves, which way is it? And if you just put your charts on a line chart, it's very simple. Use a simple moving average and you'll see which direction the trend is. It's definitely down, which means that any longs that you're taking are risky. There's absolutely no reason to try and front run the market into long positions. So Rootify, he says that if you went all in Bitcoin in December 2020, then you've made a total of 0%. And if you instead started to dollar cost average in December 2020 and bought equal amounts every month, then your return is negative 45%. Depressing stats, to be honest. So the only reason that I'm bringing this tweet up is because I'm quite a big advocate of dollar cost averaging for those who are interested or new to trading. I always tell them, well, always have like a dollar cost average portfolio. And I don't ever just look at things at face value and take it as it is. I like to verify. And I don't believe that this statement is true, because if you go into a dollar cost average calculator and you say, and we put these stats in exactly, and you say, well, you started 2 years ago, so in 2000 20, right? Because we're in 2022 now. I'll run it over 3 years as well. You say monthly, you put $100 in per month, you would now be up 26%. So your initial investment was 2,400. You're now sitting at 3,045. Let's say, what about 3 years ago? Maybe a little bit. No, it's not even worse. It's 25% over there. So same thing. So that's why you need to verify what you see on Twitter. Some of these things are not factually correct. I definitely stand by dollar cost averaging. Let's say if you dollar cost average over the last 5 years, just $10, I'm sure that many of you can afford $10. You would still be up 25%. What about if you did it weekly? You'd be up 20%. Okay, that's $100. Let's bring it down. What about if you put in $1 every single day for the last 5 years? You would still be up 20%. So not extravagant returns, but nevertheless, as a store of value, it is still an option when you are dollar cost averaging. It takes you emotionally away from the market then, and you can just know that you have exposure and you're not risking huge amounts. $1 a day. Come on, guys. I'm sure most of you out there are buying a coffee a day or a couple of other treats for yourself. You can sacrifice $1 a day into things like crypto. Okay, wait, I made a big mistake here. That was starting 2 years ago. Let's change that 5 years ago. Look, so starting 5 years ago, $1 a day, you'd be up 303%. So invested 1,800 and you would now have 7,368, including your principal. So use this. It's just very simple. DCABTC.com. It's a website. You can go and fiddle around with that. Have a look at what your returns would have been with very small amounts of money and ask yourself if it's worth it or not. I personally think it is. Okay, going on to the charts though. I have the quarterly chart up. The reason being is because this quarter is soon coming to an end. And with such an absolutely important economic event that's coming up and things that are going on macro-wise, I think this is an important one to look at. And it looks bad, guys. I mean, look, this candle over here, you're left with a big wick behind, strong body that's currently still moving down. As soon as you take out the previous low on the quarter, which is the low of the year, then this is going to rapidly move to the downside. And today does have the potential of doing that. When you're talking about extreme volatility, let's just take a measured move from here down to that. The break of that line is only 6.4% move to the downside. We know going into something like the FOMC today, you can see massive spikes both to the up and the downside. If you take out that previous low, you really open up a high probability that you're going to tag that $13,880 level, which you can see is a key level. It's a very, very important zone of support. And then if you lose that, your next level is coming in with good confluence on that diagonal yellow line as well as the horizontal over here, and that would be at 10,760. So pay attention. Also, bear in mind that sometimes these things might play out leading into tomorrow. Oftentimes when we've had this FOMC meeting, the opposite happens, whereby price might have a fake out to the upside first, and then the real move only happens the next day when things start to settle down. So be very, very, very careful with your trading today. Looking at Ethereum on the quarterly as well, you can see that it also doesn't look too great. It's holding up a bit better than Bitcoin, but this can change very, very quickly. In order for this candle to turn red, it needs to move down as much as 21%. So Ethereum definitely is holding up a little bit better. Yes, 1,000 viewers, only 130 likes. Please smash the like button, guys. Also, hit the bell notification so you can be notified anytime I go live, and make sure you are subscribed to the channel if you're not already. All right, monthly chart, also an important one over here. You can see that price is stuck below all the important moving averages, which is not a good sign. Again, same thing. You got your key levels, which match up similar to what I showed you on the quarterly chart over there, on the 3-month chart. Weekly chart, very interesting. Bollinger Bands are coming up, getting tighter and tighter. This one is showing you again that risk remains to the downside. And in order for price to move from current level, let's just readjust that down to the $16,155, which is a key level on the weekly chart, price would need to move 14%. I definitely recommend, for those of you who have been waiting for a long time to capitalize on buying the dip, a good opportunity could be to scatter your orders between about $16,000 all the way down to $10,000. And one great way that you can do that, if you have a look at the link in the description below on YouTube, there is a link to Bitget. That's my favorite one for using grid strategies. I currently have massive orders that have been spread. I've set about 23 different orders. You just type in the box, how many grids do you want? 23 grids. And then you set your parameters. What's the high price that you want to start adding your positions into, spot positions, and what is your low price? And it would be from 16,000. I'm going all the way down to 10,000, and then it equally splits those levels for you. So Ethereum's, at least Bitcoin's Bollinger Band's coming in at about 15,300. Each closing week, this will continue to rise up. So it will be very interesting if we hit that within the coming days. What about Ethereum? Ethereum has taken out its previous week's low, which is not a good sign. However, it is bouncing off of the 200 moving average on the weekly. And you have the lower Bollinger Band, which is currently sitting at $955. My levels that I would be spreading my orders on Ethereum would be ranging from $1,120, which is this 255 MA, all the way down to 728, which is a key quarterly level. So those are my zones. I'll read it again for you in case you do want to use the grid strategy on Bitget. 1,124 all the way down to $728. That is my grid strategy that I'm running for Ethereum, looking to buy the dip. But with that being said, the traditional markets are not looking good, especially if this fractal does hold true. And I have mentioned many, many times, I'm not a fan of fractals. I don't really like them. But if they are in line with the trend, I'll give it the benefit of the doubt. And the trend is definitely down. Here you have Michael J. Kramer. He says he has an update of the S&P 500 analog comparing 2008 and 2022 with a close-up of what's going on right now. So zoomed in on, for example, a weekly time frame, and you can see the white over there, the white line, which is currently at 3,855 in the S&P 500, is in a steep decline. And if it is going to follow this path, you would expect the final flush out to come very, very soon. According to his timeline here, it would have to be before the end of this year. It could even be right now in September, so leading into the last few weeks. So a lot to be very, very cautious of. Don't counter trade the trend. You literally can't lose, guys. Don't counter trade the trend. You might lose out if the trend changes and it suddenly starts reversing to the upside. You're going to lose out on a small percentage. But I've been telling people this literally since $47,000 on Bitcoin. Don't counter trade the trend. Everyone was like, it's the bottom, the bottom's in. And I said, well, it's fine. I'll miss a little bit of the bottom. Look where we're at now. I haven't lost a cent in this market. Okay. DXY, you can see on the daily chart over here, is looking quite strong to the upside. We have a few things to look at here. Doesn't look like we're going to hit it all the way to that trend line, so probably can readjust that. I would still expect a push into this 111 area and then a possible, again, pullback from that zone. So something like this on the DXY, it's not going to go up in a straight line. I would expect some sort of a move like that over the coming weeks. What about the NASDAQ over here? NASDAQ, you can see, has kind of been consolidating, but underneath this line. Yesterday we had, or the day before, we had a big bullish move to the upside back into that trend line that I drew, the dashed one, and I said, if we break that down, price is probably going to hit the support box over the coming days. And now that has retested that and rejected off of that trend line as a resistance zone. So bear in mind with what you're dealing with. You're dealing with a strong downtrend over here, and you have the yellow moving average, which is currently rolling over. This is not a good sign. This is what bear markets are made of, is when these moving averages start to turn over. Looking at the S&P 500 futures chart over here, coming straight down, markets already opened. You can see, and it's opening to the downside. This is my next target, and hope that it bounces from this area, which is going to be 3,600 to 3,700 on the S&P 500 futures. VIX is going to probably shoot up today because this is a volatility indicator. And typically when this goes up, stock market goes down, crypto also goes down as well. So this has got a lot more upside. And when you are looking for that mega crash, all that you need to do, or you want to make sure, let's say there is a mega crash, because I don't want to be like the doom and gloom guy, but if there is a mega crash, to know that you're buying at a great value or at least an oversold territory, one thing that you can do is you can put this on the weekly chart and you can mark out these levels. It's 48.50 and 77 and 17. So these zones over here is typically where all the major bottoms within the markets came in. You can probably say safely, especially if you hit this 78 to 85 level, that's going to be generational dip buying opportunity. If you get this zone, look at this one over here, that was 2008. This one over here was March 2020 with the COVID dip. So if you start to see this VIX, which is the volatility index, you just type it in on TradingView, VIX, put on a weekly chart, mark out these levels. Any spike into this area, I will literally go all in, because at least as a mean reversion play, there should be some sort of a bounce out of that area. Okay, very, very, very important chart over here is the 10-year yield, because the 10-year yield essentially shows you that liquidity is drying up in the market and there could be a debt market meltdown. So with that being said, look at this. This was one of the key levels that we're looking at. People called the top over here, and we've now crossed above that level cleanly. This wick has been taken out, and now there is a real possibility that the 10-year yield could go as high as 4.1 to 4.6% is going to be your next key level, or at least your upside target. And this will seriously cause a lot of damage within the traditional market and the crypto market. So pay close attention to these yields. What about the 30-year yield? Let's see how that one's doing. So this was a previous box that we had outlined as a potential area where hopefully the 30-year yield would reject from, because remember, us in risk on assets, we want this to come back down. The yield coming down means that risk assets have a chance to run, and you can see it's now pushing straight through this box. It's smashing through the resistance, and now you're going to start to target similar levels around the 4% level on the 30-year yield. So a lot of very, very important things in the traditional markets to be focused on. Looking at the Heikin-Ashi, which is Japanese candlestick pattern on the weekly chart for Bitcoin, you can see throughout the history of Bitcoin, anytime that you start to get consecutive green weeks, you know that the next major bull run is about to begin. And I'm sure that you can agree with me if you have a look at this picture over here. This slowly started to go up, right? You had green, a little bit of red, pause, green, a little bit of red, pause, and then green, 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 green. This does not look anything like that. It literally looks like the reverse. This does not look like we are setting in a bottom anytime soon. This is probably going to be a couple more months of this. Maybe if we get a big spike to the downside as a capitulation, then we can pull back up. My biggest hope would be something like this. Spike down to around 10, 11K, come straight back up, and then maybe you kind of range between about 10 and 15K, and then slowly things start to build up over time. But at the moment, I'm sure you can agree with me, this looks pretty damn bearish on the Heikin-Ashi candlestick chart. So no need to rush at all. Use the dollar cost averaging strategy if you're desperate to get into the market. That's the best and safest way that you can do it. You can see Dylan Leclerc says here that new highs for interest rate expectations. March 2023 Fed funds futures is now at 4.7%, which is extremely high. And using our Fed funds chart that we use, again, I have brought this up earlier on this week, I think on Monday, still moving strongly to the upside, 920 now, very, very strong. You can see green is moving up. The white moving average is also moving up. So it looks like this will continue to the upside, at least for quite some time. You don't need to try and fade the Fed. Okay, lower time frame things. What are we looking at on the 3-day chart? Bitcoin still stuck within this parallel downward channel. And I think that the upside targets are becoming less and less likely that we'll even tag the top mid-range over here. The Fed would need to probably give like a 50 basis point expected to 75. Remember today, they'd probably need to give like a 50 in order for this area to be hit now. I don't see it happening. So I would probably say that the most likely outcome on the 3-day chart is either we kind of sit around here for a couple more days, maybe we get a 75 basis point, pushes us back into the range one more time, people get excited, and then it probably just rolls over going into the end of the month with all the quarterly closes. The big funds are going to be rebalancing their portfolios and things like that. So either way, I do expect some sort of a capitulation in the days or weeks to come on Bitcoin on the 3-day chart over there. We really use this one a lot. Still expanding on the super guppy indicator for Bitcoin, Ethereum. Let's see, expanding, turning red and expanding. Near, I think we already covered that one as well. Turn red, expanding. Solana, red and expanding. ApeCoin, this one is contracting a little bit, but still bad, still red. Cardano expanding to the downside, red. What about Matic? Matic is starting to squeeze gray. If it stays anywhere around here or lower, it will start to turn red. I will pull up some other charts on those altcoins to show you as well what I'm seeing on the lower time frame on the 4-hour chart in just a moment's time. Okay, what about this chart over here? I haven't brought this up for a while. I actually want to see quickly. So let's just turn this on. EMAs, okay, we stuck below the 9 and 34 EMA, but with the moon phases, we can see did its job. You got the bull moon over here, price pushed up into resistance, and then has consequently started to come back down. And I think that the next moon phase is coming soon. It should be 15 days, somewhere around there. Let me double check this one. 14 days. So from there to there, 14. So on the 25th of September, let's put in a vertical line over there to mark that off. This will be the next one. We'll see how that plays out if it does its job again. If price is stuck below this horizontal box over here and this area gets flipped into a resistance, that when I say this area, I'm talking about 19,100 to 19,600. That area flips into resistance, and you have the moon print over here with all the closes within the major markets for quarterly closes, options expiry, all of that. Then this also creates a bad environment. So definitely still a risk off environment in my personal opinion. Okay, but let's turn that voodoo stuff off. Let's look at the 1224. The 1224 EMA is still angled down, price stuck below, expecting continuation to the downside. Lower time frame, now we're going to go through some of those altcoins for you as well. You can see Bitcoin is kind of hitting its final line of support over here, but you do have the momentum oscillators which are angled down, and that's going to add extra momentum and pressure to the downside. So looking at this, we kind of ran a long position, which I'll touch on shortly, from pretty much right at the wick bottom over here. So if you are in that position, continue to hold it, because maybe what could happen is some sort of a bounce out of this area, one more spike to the upside. You know how everybody gets messed around going into these events. Like I said, oftentimes the exact opposite happens of what everybody thinks. So you do have some exposure with absolutely no risk if you took the longs that I gave on the Discord group over there. What I have to say about this is, once you start to take out this level over here, I think it's very, very unlikely that the yearly low, which is this 19,593 level, holds. I doubt this level holds. And of course, we know that the Fed is going to be the determining factor with the gun to everyone's head on whether that plays out to the downside or not. What about Ethereum over here? Ethereum, your next target remains all the way down to $1,010 to $1,080, so a little $70 range over there. Same thing as Bitcoin. Price starts to push through even on a wick basis, and it starts to take out this zone over here, which is the yearly low. You can probably expect much lower prices. What about Near Protocol? Near had their conference the other day. Looks like it sold off after the conference as expected. Currently, it is coming into a support zone. Technically speaking, if the environment were any different, this would definitely be a buying opportunity with your stop loss. As with all the other coins, I mean, that's a bit too far down. You can't enter here and have your stop loss 20% down. So I would take it cautiously. If you are interested in Near, I'd probably be looking at this one on the left, and maybe this liquidity area. As soon as this box gets lost, I would then just wait for new lows, so a retest of the lows or probable new lows on Near. So Solana. Let's see what Solana is doing. Same thing. Solana is also coming into an important zone over here, which is between $30 and $31. You really want to see this level hold. If this level doesn't hold, same thing. You're coming all the way down to the lows and possibly going to break that and go even lower. ApeCoin, we did say was one of the better ones. Here you got your support zone, so price holding above here would be good, but I don't expect this one to defy the whole market despite their whole staking thing that's coming up. You start to lose that level, same story. You can probably start to target all the way down to the lows. What about Charles's project over here, Cardano? Cardano holding within a range over here. As long as it's holding above the range low at 42 cents, then it is essentially a buy with an opportunity of targeting towards the mid-range. Same thing as everything else, guys. Probably not going to defy the whole market, but it does have the Vasil hard fork coming up, I think in like 1 or 2 days' time. So maybe that will be some sort of event that could be a catalyst for upside momentum. Just know what you're dealing with. Understand your risk over there. Matic. Okay, let's see the Matic over here. Matic caught within a range as well. And it's in a dangerous zone. Look at that. It's already losing. It's actually wick below. I probably wouldn't be buying Matic. I think I gave this one in the Daily Candle newsletter yesterday. I said that there is a possibility that this creates a deviation in the same way that you had with all of these previous times over here. So let's grab that. So you had, right, deviation, 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 and then you have it over here. So the way that you can play this is if you start to see things kick back up to the upside and you do decide you want to go long on a low time frame, let's actually try it now. 15-minute chart. Let's see. All right, let's just quickly bring that up, clean this up a little bit for you. So I would watch it like this, put in a basic trend line on Matic if you are interested in Matic on a 15-minute chart. Basically a reclaim above this area. If you start to see price come like this, you're going to miss out a bit of the move. You have to understand that. But if you see price recapture that, now you've broken the downward trend line over there, the diagonal, and you've got back into the range low. That would be your trigger to go long over there, and you can start to target back towards the mid-range. The only way this happens, again, is if the results are good from today's FOMC meeting. Okay, Bitcoin's our long that we had over here, long that was meant to flip into a short. I don't know if it's going to make it to the top, but at the end of the day, look, you're not risking anything. I did tell you guys that in the Discord group, move your stops to break even. So you shouldn't be in any risk whatsoever. If anything, you should just be holding that position. I don't see any point in even taking profit. Just give it a chance. Maybe the FOMC result is better than expected, and you get one of those massive candles to the upside. If you do see that, by the way, then sell. I want to touch on one more thing as well for those who might be fearful going into the FOMC. So you might have FOMO and you're worried that the market is going to run away from you. It's not going to happen. So if you see something like this, right, you have price action, let's just say it's going around like this, and then suddenly the FOMC comes, it's amazing, fantastic. We go to 25 basis points, just as an example, and you see a candle like this. I don't want you to chase that. And the reason why is this creates an imbalance within the market. And if something like that happens, you will always get an opportunity to get back in, even if things continue on like that. Eventually, this area gets refilled. At least the majority of this area. I'm not saying the whole area, but at least that part of the area. Okay, well, that's not going to help you if it's at the top. At least down to this part of a candle. When you see a guard candle like that, as they call it, it will always get refilled, and that would be your opportunity to get back in. If the whole structure gets changed, you just have to be patient. Price will eventually revert most of this candle, and then you have an opportunity to enter somewhere over there, and then you can participate in the next bull run. But we're nowhere near that. I just want to put that out there because I used to deal with those emotional challenges in the past as well with regards to price running away. So current price action, low time frame, simple trend line over there. Bitcoin stuck below the 2017 high. You have a descending diagonal trend line over here. Price needs to recapture this in a very similar way to what I just showed you on Matic. Price needs to break above the horizontal and break the diagonal, hold above there. That's going to be at about 19,200. Then there's an opportunity that maybe more upside comes in. What about Ethereum? Ethereum's also stuck exactly the same thing. Pretty much looks almost the same over there. You have a trend line. It's not a perfect trend line, but it is a trend line. Price stuck below that trend line and below the 2017 high, meaning that probably low prices are going to come into play. So, guys, I think that brings us to the end. That's it from me today. I will update you all on Twitter, on the Discord community as well. If you're not in there, have a look at the description below. All the links are below. Make sure that you join us over there. There's a lot of free alpha. Join the Daily Candle newsletter from Sheldon and myself. We give our daily updates. But yeah, for the most part, most of you are probably better off just sitting on your hands waiting for probably this whole week to end, to be honest with you. Not just today and tomorrow, but just wait for the whole week to end. If you are trading and you do want to support me, consider using one of my links below. You lose absolutely nothing, and it does tremendously help me. So, guys, I think that is it. I will see you all on the next video. Good luck today and trade very safely. Cheers for now. How's the comments and all today?